Williams here with Money Reverse. Come right on in. We're here for Stock Savvy Day 3. Stock Savvy Day 3. So come right on in, everybody. Come right on in, everybody. Stock Savvy Day 3. When you arrive, can you just put Day 3 in the comments? Put Day 3 in the comments. That lets me know you're ready. And it also lets me know that you heard me. So come right on in and say hello too. Say hello, Day 3. I'm going to share this on my personal timeline. If you think this is something that your friends and family would like to see, can you tag them or share this out? However you share on the platform that you're on right now. So either platform. I'm going to share this on my Facebook timeline. And I'm going to do that right now. Yeah, let's share now. I'm not even going to say nothing. I'm just going to share because then they'll see me just pop up talking. Come right on in. We're here for Stock Savvy Sessions Day 3. So welcome. It is time to get started. So we are going to get started. Let me just share some teaching with you right now and just kind of tell you what we're going to do. Now, if you are here because someone shared it with you or someone you're looking at it on one of your friends' timeline, I'm going to say hello, welcome. And I'll welcome you again a little bit later in the program. Thank you, Joe. Joe says Day 3. Day 3, that's what it is, Day 3. You see it here by Joe's comment, and you also see it by the upper right-hand corner of the agenda of what we're going to talk about today. In Stock Savvy Sessions, we have a biblical investing lesson. As I always share, Money Reverse is not only my brand, it is my promise. I'm going to give you Christian biblical principles that support the sound money practices that I teach. The Bible tells us why, and then I'm going to take you beyond that and actually give you the how, what to do and how to do it. So with that, and this is all following principles that are outlined in the Christian Holy Bible. So we're going to have a biblical investing lesson. We're also going to talk about earnings season, what's in the reports. And then we're going to do some savvy stock charting. So with that, I'm going to also share here, there is some homework that I'm going to assign, some things that I'm going to put out here so you can download. And I'll share with you in a bit a link so you can get to the free Stock Savvy course in Money Reverse University. You do have to register for the course. What I'm going to ask you for is your first name, last name, and your email address. So with that, then you can get access to all of the previous lessons, all of the homework, and all of the downloadable resources. So I want you to make the best of this learning opportunity. As we wrap up National Financial Literacy Month, we want to make sure that we're all getting more financially literate in the month of April. I hope you set that as a goal every April. I hope you do. Biblical investing lesson. This lesson is the Lord shall increase you and yours more and more. And this comes from Psalm chapter 115, verse 14. The King James Version is listed here. And it reads, the Lord shall increase you more and more, you and your children. Amen. If you can receive that, whether you're here live or watching on the replay, can you just say, I received that? Put that in the comments. The Lord shall increase you more and more, you and your children, not just you, but your descendants as well. So if you can receive that, just put in the comments, I received that. You know, when someone gives you something, you do have to take possession of it. It doesn't just become yours by you saying, listening to them say, hey, I'm going to give you something. If I send you money on PayPal or Cash App, you have to receive it. You have to receive it. So just as the scriptures are speaking, we have to receive that word. The word has always been out there, but we have to take action to receive it. So thank you. I see some of you saying, yes, I receive that. Miss Krim says, yes, I receive that, because we do have to take possession of it. Even though it is ours and it's ours, the word is true. We have to take action, just like you have to receive that PayPal payment, that Cash App payment. Somebody sends you something in the mailbox, you have to go and receive it. Now, this looks like a video simply because it is. It is a video lesson that is in Money Reverse University. And you know, it has nothing, this lesson doesn't even include that receive conversation that I just had. That was just for today. So if you want to get access to this lesson, I'm going to give you a link to Money Reverse University to sign up for the Stock Savvy course. Money Reverse Stock Savvy. Sign up for that. It's free, and you can get access to all of the homework, all of the videos, all of the downloadable resources. Because I do want you to get this. The Lord shall increase you and yours more and more. That's Psalms chapter 115, verse 14, King James Version. Be blessed, everybody. The information provided here today is for educational purposes only. Any market information that I share is purely commentary and should not be construed as investment advice, nor should the information be construed as a solicitation to buy or sell any securities of any kind. Now, we are going to continue in our conversation about earnings season. Just as a review, in our day 2 lesson, we went through how to find out which companies are releasing earnings, how to find companies that are reporting their earnings using Yahoo Finance. There's a 3-step process that I detailed. And this is one of the detailed processes. Again, you can go back and look at lesson 2 to get those details. So because I told you all about what happens when companies release their earnings. So the next logical question was, okay, how do I find out who's releasing their earnings? That is what we covered in our day 2 lesson. So if you missed that, go back and look at the day 2 lesson. Now, those of you, I see several of you here that I've seen this week. If you have been here for any of the lessons, put in the comments which lessons you've been here for. Day 1, day 2, day 1, day 2, day 3. If you were here for all of them, just say I'm here for all. I'm here for all. If you've been here for day 1, just put day 1. It's so good to see you guys come back. It is such an honor to have you join me. So I just want to let you know, I don't take it for granted. Your time is very valuable. You make a choice with everything that you do. And when you make a choice to be here, you're saying, this is important for me. So I appreciate that, because there's a lot of things pulling for your time. I understand that. Me too. When people tell you they don't have time, no, what they're telling you is that what you're doing is not important. No harm, no foul. No harm, no foul. Stuff comes up. So to see that you've been here before and here today, to me, that is, I am just grateful, because there's so many things pulling for your time, especially at 7 p.m. on a school night, right? Okay, so thank you. Thank you. I see Joe's been here for all 3. Valerie, hey, Miss Valerie. Valerie was here for day 1. Miss Green was here for day 1. Thank you guys for coming back and being here. So with that, we did a review of what happened on day 2. So go back. If you missed day 2, that day 2 lesson tells you all about how to find which companies are releasing. So that's a pretty informative. You walk away, again, my goal is with every lesson, you walk away with something you can use right now. So with that, that's what came out of the day 2 lesson. Now let's talk about today what we are going to continue in earnings season, and we're going to talk about what's in the reports. What's in these reports? You know, I shared with you that companies release their earnings. They have to. It is required by the Securities and Exchange Commission. It is that day that the company releases their earnings. You're going to see the stock price move. You're going to see lots of companies, and it's a buzz all around the market that it's called earnings season. So you're saying, okay, all this stuff, Carolyn, what are they talking about? What is in the reports? Now, if that's a question that you have, that's a question that I assume that you would have. So what I'm going to do is kind of go through some of the information that's in the reports. Of course, I can't go through everything. I'm only going to go through one major piece of information, and it is a pretty big one, and it's a pretty big one, but I want you to know that, okay? And that piece of information that's in the report is earnings per share. If you've heard of earnings per share or EPS, can you say I've heard of EPS? I'm going to talk about earnings per share simply because they're reporting earnings, and this is a measure of how they're doing. They have a whole lot in the reports, but we're just going to deep dive into one particular area, and it's earnings per share. Now, what earnings per share is how much money they made, how much profit they made. So what they do is they say, okay, we made, 5 billion in profit, 5 billion. How does that count? Well, you kind of divide it up and say earnings per share. So if you own 10 shares, you get 10 shares worth of the 5 billion in profit. So the earnings is relative to how many shares that they have, because let me explain earnings per share first. Let's go through what we have here on the screen. So with that, earnings per share, I'm going to go through a formula. The first thing is sales and revenue. The company reports how many sales that came in, or whatever they're selling, goods or services or houses or lands or whatever they're selling, widgets, buckets of paint, whatever they're selling. How many sales, how much money came into the company for this reporting period? And they report quarterly. So how many what's the dollar amount of the sales that came in? How much revenue did you bring in? Now, when you get that number, you got to take away the cost of goods sold. That is what did it cost to make those goods? What did it cost to get that sale? And what you include in there, each company, depending on their accounting principles, they may do it a little bit differently. But in general, the cost of goods sold is the cost of raw materials, the cost of labor, the cost of the machinery to make the materials. Some companies will include what it costs to get the material sold. You have to truck it to the stores. You have to put it on the shelves. You have to store it. You have to store it in warehouses. So all of the things that it costs to get that thing sold. If when you got it to the place, did somebody have to turn that raw material into a cake before it's sold? So each business is different. So the cost of creating the goods that you sold, you have to take that away from your sales and revenue. That results in what's called gross margin. Gross margin, the profit that came in, but nothing's been deducted from it. So it is the gross margin. Now, from gross margin, we take away the operating expenses. What does it cost to run the business? You have to pay your secretaries, you have to pay the admin people, you have to pay your management people, the people that weren't directly involved in creating that cake or that bucket of paint, whatever it is that you sold. There's other expenses that you have to get the lawn cut, some advertising expenses. Then you also have to pay insurance. Think about all of the things that it costs to run your business. The operating expenses you take away from gross margin, and that results in business profit. And as I have here an arrow pointing down to shareholder, business profit goes to the shareholders. If you own that stock, you get a portion of this business profit. So how do they do that? They take that total amount of profit and they divide it up by the number of shares that they have. That is earnings per share. If that makes sense, you put in the comments that makes sense. And if it doesn't make sense, put in the comments what questions that you have. And if you're watching on the replay, do the same thing. I'm monitoring these comments, so I will get it no matter if you're watching this a year or 2 years after I've created it. So definitely, wherever you're watching this, if you have comments or if it makes sense, just put in the comments it makes sense. So with that, this is earnings per share in a nutshell. Just in a nutshell. Let me show you a quick fictitious example of this. Let's look at a company that's called Make Money Incorporated. Make Money Incorporated. This is a fictitious company that I made up. Let's just kind of walk through it real quick in the same things. The sales and revenue. Let's suppose for this quarter, Make Money Incorporated reported out $10 million in sales and revenue. And Make Money, what they do is they make money, okay? So the cost of goods sold, whatever it cost them to make that money, to get ready to make that money, that was $2 million. So they had sales come in at 10 million. 2 million was the cost of goods sold. The gross margin is $8 million. In earnings talk, that is called top line. So if you're watching an earnings program, if you're watching Market TV and you hear from the earnings report, they beat on the top line, that's what they're talking about. That means when they say they beat on the top line, they said they expected 8 million, but they made 12 million on the top line. That means they exceeded the expectations that the analysts or the street had for them. Okay, that's the top line. Now, you got all of that gross margin, but you still got to pay the bills of what it costs to run the business, paying your management team, paying for the air conditioning, paying for all the things that it takes to run the business. For Make Money Incorporated for this quarter, that was 1 million. We got to take 1 million away from the 8 million of gross margin, and that results in business profit of $7 million. That is the bottom line. That is your gross margin once you've taken away the operating expenses. So if you hear an earnings report and they say this company beat on top line, but they had a miss on the bottom line, that means that, you know, when they look at their goods, yeah, they're making money on their products, but what made the difference in their bottom line is operating expenses. They got too many costs of operating their business. So the 7 million was a miss. This is why when you see a company announce that they have layoffs, that they're laying off people, guess what happens to the stock when they announce a layoff? Stock price goes up. And you think, oh my goodness, this company's doing bad. They're laying off people. Contraire. Remember, we're talking money. We're talking money. We're not talking hearts. We're talking money. When they lay people off, their operating expenses go way down. They have fewer costs to run this business now. So take a look at it again. The cost of salaries come out of operating expenses. So that means this 1 million may cut down to 500,000, and then their business profit is going to be 7.5 million. So when companies lay off people, that speaks directly to the bottom line. That speaks directly to the bottom line. That's why their stock price goes up when they do that, because you know their expenses are being cut. If this makes sense, put in the comments. It makes sense. So with that, this is just one of the components that's in the earnings report. This is just one thing that's in the earnings report. So I do want you to know this because there's so many other components that's going to be related to earnings per share, because it's an earnings report. So that's all about how much money did they make. Okay. So now one thing I want to just share you, earnings per share, EPS, just as pointing it out, take a look. The example we've been using all week has been the Coca-Cola company. There, the name is circled at the top. I just grabbed this quote and just splat it right on top of the screen. And this is where you see earnings per share. It is circled right there. $2.19 per share is what Coca-Cola had. So with that, this was before, no, I think Coca-Cola has already released their earnings. So just so you know, all of this that I'm teaching you, I want you to have this in the background so that you know how it works, but you don't have to go calculate anything. So if you're somebody that says, wait a minute, I can't do stock market because I'm not good with numbers. How many things have you had to calculate? You've been learning stock market for 2 or 3 days here, depending on how long you've been here. How many times have you had to pull out a calculator? You don't. This is about common sense. And that's the way that I teach it. I teach it in a way that it makes sense to you, because then you can apply this to any business. I do this same thing in my money reverse business. For my business clients, I work with clients that have businesses. They hire me as a coach, and I help them get their business to be profitable. And we go through this very thing. I go through this very thing with my own business. I know which ones have the highest gross margin. I know what's my highest grossing products. Those are the products I'm going to push more often. There's some products that I just don't do anymore because it just doesn't bring enough profit for the amount of time that's invested in there. So there's some clients I just don't take. No, I just don't do that because it just doesn't bring enough profit. Got to think like a business, not like a heart. Okay, good deal. I see several of you saying that makes sense. I am so glad. I'm glad that this is making sense to you, because it's not difficult. You just need to have it broken down. And now I want you to go and watch a TV stock show because it's earnings season. Earnings reports are coming out every morning, and every morning before the market opens, and then after market close, earnings reports come out all the time. I want you to listen to some of the things, and now when you hear them say top line, bottom line, and earnings per share, now they're going to say several other things. And if you have taken my course before, you can go back and review this. This is an earnings season deep dive. This is a course that I taught, I think, a couple of years ago, but I updated it in 21. Well, I taught it several more years ago than that. But I kind of went through earnings season and just really went through all the things that they're saying in those reports so that you'll know what's going on when you hear that information. Again, I want you to be savvy. I want you to be stock savvy. If you want to be stock savvy, just put in the comments, stock savvy. So now we have one more session. Tomorrow is our last Stock Savvy session. And in that final session, when we talk about earnings season, I'm going to tell you what you should do during earnings season. I'm going to tell you what you should do during earnings season. Okay, so definitely show up for that. And I will love to have you back here as we continue on and you get a good dose of what earnings season is and what it means and what you can do during earnings season. Now, here we go. We're going to do stock talk. Here is this scenario. A friend walks up to you and say, yeah, there's a good stock that I want you to know about. Yeah, it's going to be good. It's cheap right now, but I definitely want to tell you about it because I know that you trade stock. So this is the symbol. Take a look at it. Go buy you some. I got me some. No, you say, have you bought any? Not yet. I haven't bought any yet, but I'm going to. How did you find out? A friend told me. Okay. Thanks, buddy. Thank you. That's not enough information to determine if you buy a stock or not. If that ever happens to you, what do you do next? I've given you every one of these Stock Savvy sessions. I've given you a couple of questions that you should ask yourself and answer yourself. So there's 4 questions that you should answer that you know about so far. Let's see. How big and how much? If you know of another, okay, number 2 is the stock interesting? Is it rewarded? And then here are the next one question that I want you to ask and answer. It's not a question, it's something that you do. What do you do next? Get a picture of the stock performance. I want you to see what this stock has done. With that, the way we're going to do it is we're going to look at the charts. Okay, we're going to look at the charts. Now, before we look at the charts, I want to ask you all a question. I just want to get public opinion. I'm gonna share this, and I'm gonna come back and we're gonna talk about stocks. Let me get my poll of public opinion. I listened to earnings reports today from a couple of companies, McDonald's and Chipotle Mexican Grill. Chipotle. And when they did the earnings per share, their gross margin was higher. Their gross margin, I'm going to go back. And I'm going to show you. Remember, I should have asked you this before I got to this point, but I want to know if this is true for you guys. I'm just curious right here. So McDonald's and Chipotle Mexican Grill released their earnings reports today. Now McDonald's and Chipotle Mexican Grill used to be cousins. I think McDonald's used to own Chipotle Mexican Grill. There was a connection there probably about 10 years ago. So, but they are completely separate companies, separate trading symbols. So they're not directly tied together. But let me tell you something that they both said. This right here, the gross margin, when you take their sales and revenue and you take away the cost of creating that sale, the raw materials and whatever it takes to make that sale, that's gross margin. Both of these companies' gross margin beat expectation. They beat on the top and bottom lines, and their stock price zoomed up. The stock price zoomed up on both of them. The thing that they both said was that they are taking their prices up. They're taking the price of all of the things that they sell up. And we all see it. We see that the price is going up of everything. You know, you try to go get anything and it's at least 30 to 40% higher than it was 2 years ago. So they have been doing price increases along the way. And they said their traffic, both of these companies say their traffic, the demand for their products has not gone down. They keep taking prices up and consumers are continuing to pay. And of course, me, the financial coach, going, I mean, I get it. But so let me just ask you, be completely honest. Have you adjusted your spending during this high inflationary time? Do you still eat out the way you used to before inflation was high? If you are doing the same thing that you did a couple of years ago, just say same thing, roughly the same thing. If you've made adjustments, kind of put in the comments that you've made adjustments. I'm just curious. And if you're watching this on the replay, I'm curious too, because the proof is in the pudding. These companies are making money. And what they're saying is we as consumers have not stopped. They're taking their prices up and we're continuing to pay hand over fist money for goods and services. Amazon releases, let's just talk food. Let's just talk eating out. So if you've made adjustments, yeah, okay. Adjusting as needed. Yeah, making adjustments. That's good. That's what I was thinking. Doing the same thing. Okay, Sonia's doing the same thing. Okay. This is, I get it, but I'm going to tell you that unless your money has gone up more, I want you to make some adjustments. Because that money is coming out of something and it's probably coming out of what you would save. So I don't want you to compromise your saving. If you're not saving, start saving. Let me tell you what I do. I eat out one day a week. And sometimes when I eat out, now I cheat too, because if I go eat out one day a week, I may go get a 10-piece bucket of chicken. and that one day a week is typically on Friday. And so I have things in the freezer, or I go get something so I don't have to cook on the weekends. I cook every other day. I cook during the week. So, but I eat out and I look forward to it. I look forward to eating out. That's my time out of the kitchen. I love to cook. I cook every day, just about. And, I don't need to cook every day because I don't eat all the food every day, but I love to cook. So with that, I make adjustments. And so I look forward to eating out, but I'm going to tell you, I have scrutinized when I think, okay, the other day I told my sister, I say, I feel like eating McDonald's. No. I feel like eating a popular fast food restaurant with a yellow symbol on it. I go, I hope I don't throw it up. Last time I had some of that, I threw it up because I typically don't eat that. But I'm making choices. When I look at how much I have to pay when I go out, it's a little bit a step above what that is. So all of that to say is make some adjustments. Most people are not making adjustments, and we see it in what these earnings are reporting out for these companies. So I just want you to know, be conscious of how much you're spending on these non-durable things, and just make sure that it's worth it. Make sure that it's worth it. If you get it and it's not the best hamburger that you've had, I would say go get you some ground beef and try it at home. Try it at home. You can probably make 10 hamburgers, 5 hamburgers with the cost of just one. Okay. So with that, just something I want to poll, a public opinion poll. Okay. Now, I'm not trying to tell you how to run your life, but I am a financial coach, and I want us to be more financially savvy. And even in these difficult times, our financial condition is not going to be worse. We're going to come out of this high inflation time. We've had 2 years of 7+ inflation rate. We're going to come out of this looking better in the name of Jesus. So, but we got to make some adjustments as well. Yeah. Say I look for buy one, get one coupons and manager specials. Yeah, that's good. Exactly. This is exactly what we have to do. We're adjusting, we're making adjustments, and do that, because I don't want your financial condition to be ragged as an end of this inflationary period. And we're still going through it. It's going to be going on for a while. Okay. So thank you so much for participating. I just wanted to know. So now I'm going to go back and let's talk about stock talk. Somebody tells you about a good stock, and what do you do next? I want you to get a picture of that stock performance, and you do that by looking at the charts. Okay. Now, a chart is a graphical representation of the past pricing, volumes, and the performance history for a particular company. We look at the charts. You can look at numbers, but chart tells you a picture much faster than the numbers. I love graphs. I love charts. I love seeing graphics that even if it's just numbers in a column, I love that stuff. I'm that weird person that loves that stuff. And why do you use a chart? A chart can show you the past. That's all it can show you, but it can help you to project what might happen in the future based on the past. Take the past into account, take what's going on right now, and then you come up with your thesis of what you think is going to happen. One thing I do want you to put in the comments, the chart tells me the past. Can everybody put in the comments, the chart tells me the past? It is important that you know that the chart tells you the past. I don't want you looking at a chart thinking that you know what's going to happen tomorrow. You don't. The minute the past happens, it gets on a chart, but the chart tells you the past. It's not the future. There's other things that come into play. Sometimes we'll look at charts and go, oh, I know what it's going to do tomorrow. No, you don't. You have information, but don't think that that is the ultimate layout roadmap of where this thing is going. Yeah, the chart tells you the past. As long as you know that, we're good. And when you type it in the comments, the reason I ask you to do that, because that's going to help you remember it. You're going to remember it. You're not going to forget me telling you, saying that the chart tells me the past. When you still look at a chart, the chart is always the past. Now, what I want to do, when we look at a chart, we want to look at the trends. The chart tells us the past, but what we're going to do is look at the past and kind of see which way has this thing been trending. And a trend is a continual pattern. It didn't just do it one time. It's when you look at from here to here, this is what has happened. This is what we're seeing as a pattern in the charts. Okay, so with that, there's 3 ways that a stock can be trending when you look at the chart. The three ways that it can be trending is up, down, or sideways. It can go up, down, or sideways. And when you look at the chart, when we say, what is the trend? How has this stock been moving for the past year? There's only one answer. And the answer is up, down, or sideways. You say, but Carolyn, no. It has to be more than one answer, because in March, it was down. But then in earnings season in April, it was up. But then it went back down again in June. So how can it be one way? Up, down, or sideways? And I'm going to show you how you can find that one answer in 5 seconds. In 5 seconds, and looking at the chart, I'm going to show you how you can find that one answer when you're asking how it trends. So hang on. If you have 5 seconds, I'm going to show you how you find how this stock has been trending. Okay. Now we're going to jump right into, instead of me just using a whole lot of words and telling you, let me just go and show you. Charts are visual. So instead of just putting words out there, let's just jump right to the let's see it portion. This is the portion of our lesson where I actually show you how to go and look at the information that I'm talking to you about. Instead of me splashing it on the screen for you, I'm going to show you some examples, but I'm going to tell you how you go to it even when you get off this lesson. Okay, so we're going to use for our, as we have all week, Yahoo Finance, www.finance.yahoo.com. We're using this for our Stock Savvy sessions. If you can use it on a computer, and that's what I'm using, my Mac, all the examples are going to be from the computer, but you can also download the free Yahoo Finance app and use it on your phone that way. Either way works. I like the information that they're giving here. Again, this is not endorsed. So with that, when you go to finance.yahoo.com, this is the Yahoo Finance main screen. So what you're going to do is find the company that you want to look up. And if you know the company symbol, we're going to look up First Republic Bank. Boy, this, yeah, this one, oh yeah. Yeah, I need to stay on focus, but I'll tell y'all what happened with this one today. Tell you what happened with this stock today. I always pick, for example, stocks that I know gonna be acting crazy. I always pick for Stock Savvy examples of companies that I know gonna be acting up, so that I can talk about them every day and show y'all. And then you walk away from Stock Savvy knowing what happened this week. You can't be in a stock class all week and then don't know what happened that week. No, we're not cracking open a book. We're looking at real life stuff here. So if you like Stock Savvy, say, I love Stock Savvy. Say, I heart Stock Savvy, or put some hearts out here. Put some hearts in the comments. So with that, First Republic Bank, if you know the symbol for First Republic Bank, put it in the comments. We've gone through it all week. But if you don't know the symbol, you just start typing the whole company name right here in this top bar. This is the search bar up here. See the little hourglass there? So you can see the little hourglass there, and you can, the hourglass in the blue at the top. You can see that there. Oh yeah, I see my hearts, yeah. So with that, you can see that you can put First Republic Bank. The stock symbol for First Republic Bank, I think it's FRC. It's FRC. Sorry, it's FRC, not FRB, but First Republic Corporation. So with that, type in First Republic right there, or put in FRC, and when you click, this is what's going to come up. Now, in the past, last few days, I've shown you a quote from First Republic, but I've only shown you this portion here with the fundamental analysis information, just the words. The chart, I did a picture of the entire screen. So you can see here that when you see this fundamental analysis information, the two columns that start with previous close on one side and start with market cap on the other side, to the right of that is where you see the chart. It's all right there together. But just so I could have it big on the screen, I've been cutting out the chart on day 1 and day 2. But today I wanted to show you the screen. Here's First Republic Bank. Let me tell you a little bit about it. I took this snip at 2:57 p.m. Eastern, which was 1:57 p.m. Central Time, and this stock was trading at $9.10. It is down $6.90, down 43% today. Remember, we started this week, this stock was trading at $14 and it went up to $16. They released their earnings yesterday, and look what happened today. Down $6.90. Now, there's one thing that I told you is going to happen on the day that the company released their earnings. And I said, the one thing is guaranteed: when the company released their earnings, this is going to happen. If you know what's going to happen the day the company released their earnings, just put it in the comments so that everybody can know. But definitely, this one was a mover today, and not in a good way. So with that, you can see what happened with this. And so in sympathy, all other banks were trading down as well. So it was a down day in the market. Now, let me tell you, when you first pull up the quote and you see the chart, what's going to come up is this 1 day, 1D, that says 1 day. This is the 1 day chart. And the way you know is that 1D was in blue. I got an arrow pointing to it. That 1D is in blue. So you can see that you can choose a chart for any other times. For the sake of this exercise, I want you to avoid the 1 day chart. Avoid the 1 day chart. Unless you're doing quick money trading, day trading, things like that, the 1 day chart is not enough past for you. It's not enough past, because we're going to look to see, is this something that I think I want to get in? And 1 day is not going to tell you too much. Now, if you're trying to make decisions whether to buy or get out today, that makes sense. But that's for your short termers. Somebody gives you a tip and they tell you it's a good stock, then you need to do a little bit more research than 1 day. So this is the full, let me move my face. This is the full Yahoo Finance. This is what it looks like. So I'm going to zoom in a little bit to give you a little bit more detail. So here it is, that chart. I just cut that chart out and you can see it right here, the 1 day chart. I want you to avoid the 1 day chart. It's not enough history for you. The things I want to tell you here is I want you to look at the legends in the bottom right-hand corner. I got a price legend, which is going along the top here, going up the side. You can see one line is $7. The next line is $10.33, $13.67, so forth, so on. So with that, you can see that is the price legend, and then the time legend. This was the 1 day chart, so it's got it by hours: 10 a.m., 12 p.m., and 2 p.m., and all of these times are Eastern time. So we're going to avoid the 1 day chart. The way we do that is we go up here where it says 1 day, just move over. Let's go to the 1 year chart, 1Y. Let's go to 1 year. So you would click that 1 year. And when you do that, this is what's going to come up, the 1 year chart. And so you can see it's quite a bit different. Look at the time legend. Now it's got April 25th, 2022. It's got months here instead of hours. So with that, how do we determine what the trend is? What is the ongoing way, the ongoing status of what this company stock has been doing? What I want you to do is look at the time period in which you're doing the analysis. Let's assume we're looking at 1 year for this company. What I want you to do is to take your left index finger and put it on the starting point of whatever time period you're looking at. Since it's a 1 year chart, our starting point is over here to the left where you see the yellow start point. Put the index finger of your left hand right there on the starting point. Then go to the ending point, which is the end of that year. On the right-hand side, you see where it says ending point. Put the index finger on your right hand on this index point and look at your two fingers. And I want you to know, is it higher, lower, or how is it? The right is always right. The right is the right answer. So your right index finger is lower, so the trend here is lower. Make sense? So even though you say, Carolyn, but it went up. Yeah. This stock was at $133 in actually February. This stock was at $133 in February. And in March, you can see where it tanked. It just fell off the side of the cliff right here in March. And so here we are at the end of April, and it's down to $9.07 and dropped more. It was down to $8 by the time the market closed, but I had to get ready for this course a little bit early, so I had to pull it early. I was watching, but I can't give myself that. I mean, because the after hours market stops at 7. I couldn't cut it that close. So So with that, the right is always right. Now, let me tell you an easy thing about Yahoo Finance. When you look at the trend, it's easy to tell that this is in a downward trend, even without doing that, because on Yahoo Finance, just look at the color. If the stock had been trending up, it would be green. So because this is all red and there's a line at the top of the name, that line is red. If the stock had been trending up, that line would be green. But all sites don't have that. That's what I want to tell you so that you can look at the trend. Now, if you want to look at a trend for 6 months, you just click over the 6 months and do the exact same thing. As long as you just look at the beginning and end of the time period in which you're doing the trending, that's all you want to care about. Don't worry about everything in the middle. That's the volatility. But the trend for the time period, whether it's 6 months, whether it's 1 day, whether it's 1 year, is looking at the beginning point and the end point and look at the end, and that's it. Numbers don't lie. Numbers don't lie. So with that, you can say, oh, but it was way up. It trended up. Yeah. But in the past year, this thing is trending down big time. Okay. Now this in the upper right-hand corner, see the red star, that tells you that this is a downloadable resource in Money Reverse University. If you want to download this so that you can have it as an example, it's there for the taking. Okay. Now let's look at the other one. We typically look at Dynex Capital as an example as well. And Dynex Capital, again, we're going to look at the 1 year chart right here. We're going to go straight first. When you first come up, it comes to the 1 day chart. I switched it and went over to the 1 year. I did the same thing. You can look at the trend for Dynex Capital, the starting point, the ending point, and you can see this is a downward trend. And you can easily tell that because the chart is red. Make sense? Look at the price legend and the time legend on the bottom. They're a little bit different based on, the time legend and the price legend. They're different for each stock because if it is a big gap between these numbers, you'll see that legend be pretty big. But if it's kind of stayed in the same price range, you'll see each line means a little, each line may just be 50 cents. Where if it's a big gap between the beginning and the end, they'll have each line is 25 bucks. So you have to look at it each time. That's the first thing I want you to do when you look at a chart. Okay, is look at that time legend and look at the price legend, just so you can know what those lines mean. Okay, this one also is downloadable for you, so you can download this in Money Reverse University if you choose to do so. Good deal. It is time for homework. This is the portion where I give you homework so that you can have something to practice what you've just learned in this lesson. Now, again, if you want to do the homework, you're going to have to go to Money Reverse University, sign up for the free Stock Savvy course. I just put the link again in the comments. Sign up for the course, and then you can get access to all of the downloadable resources, the video, and the homework that I'm about to show you. Okay? Anybody want to do the homework? If you're going to do the homework, say, I'm going to do the homework. I haven't seen a lot of people doing the homework, and that's okay. I know several of you here have taken my course already. I asked the question, if you've taken my course already, several people here have taken my full program, and several people here have taken, are working with me on a daily basis in my quick money trading group and making money in the market every day. And I appreciate your support. So I love that you come out. And I'll ask you, if you've already taken my program, why are you coming to the Stock Savvy session? Tell everybody why you're coming to the Stock Savvy session. Yeah. Oh, yeah, Annette, I saw that you started on the homework. You're doing great. Go back to it. Yeah. You have to turn in your homework. Yeah, Annette, I did see that you did the homework. I appreciate it. I saw a couple out there for you. So yeah, go and do some more. It gets easier. Annette, tell me if doing the homework helped you to settle in that it made more sense after you did the homework. I was glad to see your homework out there, Annette. I appreciate that. So yeah. So Ginger says there's always something to learn. Yeah. So yeah, there it is. You both all said the same thing. So you come back and say because yeah, so Leah's taking the course and getting refreshed. Yeah, so I do. And that's one thing that I like to do is I like to teach this by what's going on today. I teach it by what's going on today. So you're right. It's always different. I'm not teaching a course. Anytime I'm teaching, I'm not teaching a course and just going to the book and reading the text from the book. I adjust it by what's going on today. I'm like, we're going to talk about this today. Let me tell you about First Republic Bank. This is what happened today. That's the way all my courses are. When you take my 21 days course, you're going to get it from the standpoint of we're standing right here today. So I'm going to teach the course using examples of what's happening today. And that's going to help it make so much more sense to you. It's not like you have to find a textbook. And I tell you, most people never go back to that lesson once they take it because they get it. And I'm always teaching so they can get refreshers like this. This is a refresher. Thank you for your comments. Oh yeah, always great to refresh and learning. Wait, oh, thank you, Marcine. She says she loves Carol. Oh, thank you so much. Look, like the word of God. Oh my goodness. Oh, I'm gonna have to read these afterwards. Y'all gonna make me tear up. So let me show the homework and then I'll keep putting your comments in. Keep putting your comments in, your good stuff about me. Yeah, because I want to read them all. I want to tell you something about that one day too. So let's go through the homework first. Okay, so sign up for the course and get the homework. And Annette, I'm glad that you found that the homework was helpful. Oh yeah, I love it. I love it. My sister's laughing at me. So, okay, so the homework, let's do it. First we had let's see it. Now we're going to say let's do it. Now for your day 3 homework, I want you to go back to the homework that you've started already. Update your day 1, the stocks you chose on day 1. And I want you to add the 1-year trading trend to each of those stocks. And remember, it's either up, down, or sideways. So I want you to use Yahoo Finance stock charting for your research, just like we did here. And if you didn't do the homework for day 1 and day 2, it is not too late. You can start right here. Go to the homework sheet, select 2 stocks that are unassigned, and just do the fundamental analysis for them. The fields are right there that you need to pull up. And when you pull up a stock quote, you're going to see all the fields right there. Stock Savvy session is for beginners. So I break it up into smaller portions. So, and it helps. I find that beginners are able to do this and more. And then they come back asking, it's like, okay, I need more. And I'm like, good. That means you got it. I just don't want to overwhelm you. I talked to someone last week that told me they have always wanted to learn stock market investing and that they have paid for a stock course. They paid for an options course. They paid for a lot of courses and still don't understand. Oh, that just hurts my heart. That just hurts my heart because this is not difficult. It's just before you pay for a course. Okay, I should be telling you about the homework, but I got to say this. Before you pay for a course, I don't care what kind of course it is. I need you to really look at the instructor. If they have something, an introductory course that you can take that too, because it doesn't mean if you didn't get it, it doesn't mean that the instructor was a bad instructor. It just means you didn't jive with that instructor. They didn't teach it in the way that you learn. People are different types of learners. Some people are visual learners, some people are audible learners, and some people are kinesthetic learners. And the kinesthetic learners are ones that learn by doing. It's like, yeah, you can tell me, you can read a book or I can listen to a lesson, but I'm not going to get it until you just got to give it to me and let me do it. So people are different type of learners. And what I do as a part of my courses is I assume that there's some of all of those type of learners. And I have all of those 3 types of learnings in everything that I do. You can see it, you can hear it, and then you can also do it. I'm going to give you examples. I'm going to give you homework, take away, do it, see how you did. So with that, make sure you jive with the instructor. And I want to make sure that I'm reaching every type of learner. So I haven't had anybody take my courses that say they didn't get it. As a matter of fact, people come back and tell me, I've taken so many other courses or I spent so much money, much more money than you charge, and I learned more from this Stock Savvy session than I did in the whole course of somebody else's lesson. You got to make sure that you're jiving with the instructor. Okay, so if you didn't do your homework, I want you to go and do the homework. If you're a kinesthetic learner and need to actually do it before it makes sense, here's your opportunity. Now, let me show you an example of what that looks like. This is a snippet of our homework. What is the thing that you're going to add over here is the 1-year trading trend, and it is a drop down. Remember, it's only one of three options, up, down, or sideways. So you just click the drop down. Once you look at the trend for that stock and just click which one it is. It's as simple as that. And if you choose a stock that is in yellow with the name, if you choose a company stock that's in yellow, these are companies that are releasing their earnings this week. These are companies that are releasing their earnings this week. The thing that I don't think I saw it in the comments, but I said, when I tell you a company is releasing their earnings this week, the thing that's going to happen is the stock price is going to move. Guaranteed. The stock price is going to move with a company that releases their earnings. On that day, the day when they release their earnings, the stock price is going to move. So if you want to get some exciting stocks, pick a couple of those that's in yellow. Just like I showed you First Republic Bank, that stock price moved. It sure did. It didn't go up. It went down. Now, is it going to go up or down? I don't know. It depends on what's in the report, but I promise you the stock price is going to move. Okay. Now, I want to tell you about a few things that I have coming up. We have one more session. It is tomorrow. Our final Stock Savvy session is tomorrow. I want to tell you here on the left, my full program. If you're learning from Stock Savvy and you say, this is good, I want to learn more, I want to be able to trade and make money in the stock market before Memorial Day, you can do that with my 21 Days, the Stock Market Investing course. That course starts on May 8th. Enrollment is going to open tomorrow in our last Stock Savvy session. I'm going to tell you all about that program, and I'm going to open enrollment. I'm going to have some early bird discounts if you want to register for that course. Okay, something else that I'm doing is I'm teaching about financial fears. Do you have any money fears, money worries, things that may be keeping you from moving forward? You say, I want to invest in the market, but I'm afraid to do that. I want to buy a house, but I don't really know if I can handle it. I want to think that I'm going to be okay in retirement, but I'm not sure if, financial fears, let's face them. This is a part of Heart Fellowship Kingdom Wealth, Heart Fellowship Church, which is my home church. The series is a Kingdom Wealth. So every fourth Thursday, I will be teaching a lesson based on Christian biblical principles. So this is Thursday, April 26th at 7 p.m. It's going to be live on my Money Reverse Facebook page. It's going to be on YouTube as well, but it's going to be on Heart Fellowship Church Facebook and YouTube channels. And I'm also going to broadcast it on my Money Reverse Facebook page. So if you want another lesson from Carolyn Williams on money, that is this Thursday, again, at no cost. And then the other thing I'm going to be doing on Saturday, May 6th at 9 a.m. Central Time, I am going to be a guest on the Marriage Talk Show. So this is with Pastor Ralph and Sheila Green. Sheila Green is here today. Thank you, Miss Green, for showing up. I am going to be there with them, a powerful, powerful couple. The Marriage Talk Show on Fishbowl Radio Network. That's on May 6th at 9 a.m. Central. If you are not getting emails from me, let me know. And I can give you a link to get on my email list, because I'm also going to send out emails about all of these. And that way you can get, and when I send the emails, I send a link to tell you how to click to get there. So if you are not getting emails from me and you want to, just put in the comments, I want to get emails from you. I will put a link in here to sign up for my email list after I close this session. So then back in the comments, you can add yourself to my email list. And that way, but you can make sure that you're getting all the things that I'm teaching. Okay, so with that, these are some things that's coming up. And here we are. We're at the end of our day 3 of Stock Savvy sessions. Tuesday, April 25th at 7 p.m. Central Time. This day is crossed off. So with that, we have one more Stock Savvy session that's coming up, which is Wednesday, April 26th at 7 p.m. Central Time. Join me right where you're watching right now, and we will do the final Stock Savvy session. I'm going to also tell you about my full program that's coming up that starts on May 8th. If you want to take my full stock program, and it is a program, I'll tell you all about it. It's not a free program. It's definitely not free, but I'm going to tell you it's worth every penny. I have people, yeah, it's worth every penny. It's worth every penny and more. So with that, I'm going to tell you how you can enroll in that. I will have a payment plan available for you. And so learn all about that tomorrow, in addition to some more things about earnings season. So with that, I am going to answer your questions. If you have questions, put them in the comments. And I'm going to look back through your comments. Oh, I'm looking at your comments. Oh, thank you so much. So you keep it interesting, keep it exciting and interesting as well as current, better than the books on stock trade. Oh, thank you. Oh my goodness. I am so honored. Yeah. Oh my God. Like the word of God. It is similar to that. It comes by hearing and current info. Yeah, exactly. Yeah. Learning with today's stuff, it helps you because it's things that you turn on the news and you'll hear it and you'll understand what it means. Hey, Marcine. Oh, I love me some Marcine. Always great to refresh in learning. And we love Carolyn. Oh, thank you. Marcine has taken my full program. She's in my graduate program now, graduate group. So thank you so much. Yeah. Leah's taken the course and is getting refreshed. Yes, Lee is also in my quick money trading. Lee is one of those that says, I need some money. We need to use the stock market as an ATM. I want to go get some money to bring it home every month. Oh, Joe says, yeah, there's always something new to learn. Thank you. So again, you're answering the question when I say you guys have already taken my program. Why do you come back to these? Which I love having you here. I love having you here. I don't want you to think that I don't. And that, yeah, Ginger. There's Ginger. There's always something to learn. Ginger, Ginger is Boston. Ginger's the only one of my my money reverse friends that I call her instead of Ginger. I'll call her Boston. I don't even call her by her first name. I just say, there's Boston. Hey, Boston. So, Ginger, I bet it's cold up there. It's been a little bit cold down here too. So yeah, and Ned, I want you to do your homework. Ginger says, I want homework. Yeah. Okay, now sign up for the Stock Savvy course if you want to do the homework. I love seeing the hearts. Thank you, Miss Green. She's one of the hosts of the Marriage Talk Show. So we are going to be together on Saturday, May 6th. It's always so fun. You guys got to join us on the Marriage Talk Show. If you haven't, and the show's on every Saturday. So it's an every Saturday show. So not just that day. So that May 6th is just a day that I'm going to be on. So with that, ask me if you need more information about how to get to the Marriage Talk Show. Or if you look at any of my previous emails when I was on the Marriage Talk Show, I always include a button to say, click here, and it takes you right there. Okay. Yeah, you guys say, the chart tells you the past. Yes, the chart tells you the past. That's important to know. Thank you, Sonia. Thank you. I've seen you here a few days. So with that, thank you so much for your participation, everybody. Let me see if you have any additional comments. Say, this is new for me. Oh, yeah. Good. Annette, I love that. I got your message that you said this is new. This is exactly where I want you to be. I don't want your first experience learning stock market is from someone that you just don't jive with. It doesn't mean that other people are bad instructors, but I'm better. I'm better. If you're going to learn it, I want you to learn it from me because I want you walking away. No, even if you don't use it, it's like riding a bike. You go pull out, you can go away for a year, come back, and you're going to know things. You're going to just need a refresher. And so, yeah, I want you to learn it from me. Okay, I'm fishing for compliments, and there they are. You're a great instructor. Oh my God. Oh my God, thank you. Okay, so I am going to see, I don't see any other questions. So, very respectful of your time, a little bit over, but I am going to say there is one final class tomorrow. So I want you to come back tomorrow and let's wrap up Stock Savvy sessions. And let me know in the comments if you want to be on my email list. I will drop a link there so you can get on my email list and then you can learn about other things that I'm doing, other speaking engagements that I have. I try to do a lot of things at no cost because I want to make sure that, again, we're being, especially in April, because it's National Financial Literacy Month. I want to make sure we're being elevated. So I don't want you to miss it if you want to be there. So everybody have a great evening, and I will see you for Stock Savvy Sessions Day 4. Be blessed, everybody.